Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Thursday, it's the 5th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Of course, if you'd like to correspond, that is the email address to use. I'm just going to go ahead, bring up our disclaimers. We'll start off with the high risk investment warning. Good morning, Kim, Katie, James, pleasure to have you on the webinar as always. Thank you very much for signing in. I'll just keep the screen on, I'll keep the slide on screen for a few moments more. All right, here is our market commentaries disclaimer. And just finally, our references, MarketScope 2.0 and tradingview.com. Hey Raj, nice to have you on the webinar. Howard, pleasure to have you as well. Thank you very much for signing in. Let's go to our real rate, guys. What we've been saying that it is looking top heavy. That's really been the theme for this week. It's been tricky because it's been relentless, hasn't it? But I think there are signs now of it starting to show. There are signs now that it's starting to show in terms of pulling back. We put in the yesterday and we said it's moved from the green to the orange to the red. Red's really indicative of a overbought market. You can see that the R starting to pull back a bit. Perhaps easiest to see on the weekly. This is the day chart we look at. Let's just go through to the weekly chart. All right, and weekly charts overbought. Let's get rid of the trend lines here and look at the candlestick. I'm trying to zoom in. Yeah, there we go. Okay, just take a look at this candlestick. Let me put an arrow in. There we go. And you can see it's got this selling tail. So there is some pullback that's starting to happen now. Will it continue? I think the big release, the big news release to see if the yields continue to pull back or not is going to be tomorrow's non-farm payroll. And just in terms of tomorrow's non-farm payroll, we are going to be doing a live trade on it. I invite you all to join. I've just put the link into the chat, so you're most certainly welcome to join us if it's something that you'd like to do. Just go ahead and register. All right, so if we're getting some sort of pullback, if we're getting a selling tail, and if we still overbought, this might be sort of the opportunity for that counter trend trade we've been talking about. Remember, it's counter trend. If your trading plan doesn't make provisions for counter trend, fair enough, you know, but perhaps this might be the entry we've been looking for. I did want to mention something. Maybe it will come back to me. Let's just go through now to let's go through to the US dollar, and we've gone through to MarketScope, and we'll just take a look, see what's happening on MarketScope here. All right, let's take this out. And I think it's becoming, I think the price actions is normalizing to some extent. What I just removed, I think it's worthwhile just showing the background sentiment in the dollar, and then we'll take a look at the lower time frame, see if there's any signals that are manifesting. First of all, we can't ignore the fact that the dollar is in uptrend, but what we're saying is that the dollar has largely been driven by those real yields, and those real yields are looking like they might pull back. I remember what I wanted to tell you. Just there has been some data out yesterday, which is sort of fostering this pullback. So one of the data points was the ADP non-farm employment change that was scheduled to come in at around about 154,000, came in at 89,000. So there was some weakness in the job market. That's why I'm saying the non-farm payroll tomorrow is something that we need to look at very, very carefully. Even a component of the ISM services PMI, although the services PMI did come in roughly according to forecast, there were components within the forward-looking components were showing signs of weakness. So that's potentially why we're seeing those real yields coming down. But on a technical basis, that's all happening while it was overbought. Interesting, isn't it? So the overbought condition being helped somewhat by some fundamental releases. What we did was, let's just zoom in here. Let's make it a little easier to see. Let's bring in an arrow. This is this week's candle. This is this week's candle. This is the previous 2 weeks candle. And what we did, I think it was Monday, we combined last week's candle and the week before. We combined it and we got a spinning top, sort of an uncertainty coming out. And then, of course, the dollar just powered ahead. Why did it power ahead? It powered ahead because those real rates were shooting up. Now they're starting to come back. And it looks as if this price action is more within line of the spinning top, the combined spinning top. In other words, look, what we've got here is the selling tail coming into the US dollar. See, that's selling tail coming into the US dollar. And if we start looking at the lowest time frame that we look at, the hourly, let's just start looking to see if there are signals of potential counter trends here. Now, we'll start off with the US dollar. And here was the start of the first part of that, the counter trend move. And what we are suggesting, okay, let's just make sure that we are painting a complete picture. The real rate is frothy. When is that real rate pulling back? When that real rate pulls back, there should be some loosening up in the US dollar. There should be some bounce in the risk markets. Now, that's the hypothesis we're operating off of currently, okay? It may change next week, but at the moment, we're talking about a very frothy, overbought condition on the real rates. So potentially 1, 2, 2, 3, and what we can do is we can look at the central pivot to see if there is some sort of resistance that comes in there, and we get the next part of the counter trend. Okay, that central pivot looks fairly decent in terms of a resistance level. You can see all the resistance. Let me bring this down. Yeah, you can see all the resistance over there. Okay, so we would want to see the EMAs push to the downside, but it can't only be EMAs. We've got to see some sort of weakness in stochastic. So stochastic has to cross to the downside, and we're really looking for it to hang out in the lower quintile. If we get that type of movement on the US dollar, it would be aligning with our hypothesis of a yield that is frothy, that needs to be pushed back somewhat. So that's on the US dollar. If we are looking at the US dollar potentially as a counter trend, then there should be some counter trends on the other currency pairs. Let's take a look at euro, see what's happening. How would the hourly line up on the euro? Okay, let's just take a look at this on the weekly basis. So it's a mirror image, sort of a mirror image of the dollar. So perhaps something like this: 1, 2, 2, 3. This is quite shallow, okay. But I think we can bring in a sort of a resistance turn support over here. Truth be told, the S1 level over here has got more support around it, but we're looking for potential dips here to see if those dips turn into these counter trends. How would we monitor that? We must see a bullish cross. We must see a bullish cross on the EMAs, and we've got to see the stochastic hanging out here in the top part of the stochastic. In other words, we're looking for a positive momentum on the euro, a negative momentum on the US dollar. Why a more negative momentum on the US dollar? Because the idea is those real rates potentially still too high. Okay, those real rates potentially still too high. And what was the fundamental moves that are pushing the yields down? Well, we had the ADP number, which is a jobs number, mainly from smaller companies, come down at a significant discount to what was expected, and some of the components in that services PMI, specifically the forward-looking components, looking potentially weaker. And if those pull the yields down, what we potentially want to see is the US the US dollar give up some of its strength, and that filter through to other instruments. So some sort of 1, 2, 2, 3, and then if we get the signals, some sort of counter trend movement here. Let's just take a look at cable as well. So we just bring up the pound US dollar pairing. All right, just take a look at the weekly here, and you've got that buying tail that's come in. You see, mirror image of that US dollar, mirror image of the real rate. And what we're looking for is 1, 2, 1, 2, 2, 3. We'll keep a look at the central pivot. So these are the levels over here. I think sort of there. And then this is another level here. So looking for the pullback towards some sort of support level, and then we want to see the signals given. Remember, trigger 1, EMA, pushing to the upside, looking to push northeast. Okay, trigger 2, wanting to see positive crossover on stochastic. Even if we get those positive triggers, okay, we really want to see the stochastic move into that upper quintile and start pushing towards that 80 plus region. So there's euro, there is pound US dollar. We're really looking at counter trend movements within the hypothesis that the real rate has really reached a point where it's looking overly frothy. Raj writing possibly a dip and then a continuation of the uptrend on the back of fundamentals, higher for longer. Yes, potentially. I think, Raj, that higher for longer is really where it's at. What we're talking about here is counter trend. Why are we talking counter trend? Because that real yield is really frothy at the moment. But if we see some sort of relaxation in the non-farm payroll, if the data starts showing some softness, then perhaps the theme of higher for longer starts relaxing somewhat. But that's again conjecture. So at the moment, Raj, I want to be very clear here. We're talking counter trend. We're not talking about new trend. We're talking counter trend because the opportunities have been thin this week. Why have they been thin? Because the RSIs have been overbought. Okay, because the RSIs have been overbought, the risk reward profile skewed against us. Okay, let's take a look. Let's just take a look at DAX. See how the DAX is opening. It's just gone top of the hour. We've just got the cash open. Let's just go through to our DAX CFD, the German 30. I'm just going to bring that up. All right, and again, this is a bit of a tougher chart. It looks easier to me to read on the currencies. Nevertheless, what we do have for the weekly is a sitting top of sorts. So there is a certain amount of uncertainty. In other words, the bears have stalled to the downside, the bulls have stalled to the upside. Let's go through to the hourly. And if there's going to be some sort of relaxation in the real yield, remember that is effectively our hypothesis. If there's going to be some sort of relaxation, okay, then keep an eye on the support levels. That's the key. Keep an eye on the support levels. And we seem to have some sort of support coming in at the central pivot. Okay, what we want to see is if the EMA pushes to the upside, we want to see if the stochastic pushes through to the upside, and the stochastic needs to hang out, okay, near the 80 plus levels. So it all now really is reading the signals. Yesterday we said the biggest asset at the moment is patience. So let's just keep an eye on the support levels to see if the support levels are going to hold, if they're going to be key reaction levels. And when we talk about support levels, we're talking about euro, pound, DAX. When we talk about US dollar, keep an eye on the resistance levels, right? Let's take a look once more, just one more. Let's take a look at NASDAQ. Let's see what NASDAQ's doing. Okay, we'll just take a look at NASDAQ very quickly. Cheers, James. Thank you, and to you. Have a great day. All right. What we want to see here is, again, let's just see it on a weekly. So look how we've got that buying tail coming in on the weekly. Go through to the hourly. 1, 2, 2, 3. And then potentially some sort of support coming in. So again, looking at the support levels for NASDAQ, looking at support levels for DAX, looking at support levels for euro, for pound, all the majors. Whereas for the dollar, we're looking at the resistance levels. Again, want to just hammer home the hypothesis. Is the real yield, has it reached a level where it needs to pull back because it's looking frothy at the moment? All right, that's as far as we're going to go this morning, guys. If there are any questions, go ahead and type those in. Remember, tomorrow we'll do a live trade for the non-farm payroll. Okay, cool. Let's wrap up here, guys. Have a very good day ahead. and we shall chat tomorrow. Thanks very much, guys. Speak to you tomorrow.